Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the cryptocurrencies. Today is Thursday. We're coming to the payrolls report, which might be also significant for cryptocurrency as well. On a longer term charts, we do not have big shifts. So according to our monthly report that we have prepared last week, where we discussed two possible strategies of the Fed, and currently you know what to expect, you know what to do. Because this scenario that actually Fed currently has chosen, we also described in our recent fundamental report on the Bitcoin, and also we talked about this in our regular weekly reports in the gold market and in the Forex. Particularly speaking, they intend to print more money, so probably they will raise rate one time, maybe two at maximum, but the major moment that's important is that they returning back to the quantitative easing, but in a bit different manner. So maybe they will combine simultaneously the government measures such as the Biden semiconductor and climate programs together with using the cash of the United States Treasury to buy back the new bond issue, so pushing more money into the economy. Here we need to know only one conclusion, that in the longer term, Bitcoin could get some stabilization and even some upward action. But this rally will last not too long, maybe 6-9 months maybe. After that, collapse will follow anyway, because this program and this strategy by the Fed leads to the just poverty of the population. And soon, people just do not have enough money to buy the Bitcoin. So, and collapse here as in the stock market will happen anyway. But before that, if we'll take a look at the weekly chart, the new Fed strategy could lead to more significant action. First of all, it might be 30 even level could be tested, this previous lows right there, around 30 even, and here's nearest fib level that we have. But I also will not include that it might be even to the 36-37 area. There's a confluence in weekly overbought and another levels right there. It's previous consolidation, and the market also could retest within a few months on the background of the new Fed strategy. Since this is not breaking the ABCD pattern that we have, it's even deeper retracement. The OP remains valid, and sooner rather than later, but market, well, based on the economical situation, it should drop there. So 12 level will happen, but before that, we could get this a bit extended pullback. We need to see how it will develop, what particular steps will be taken by the Fed. But in general, the recent remarks on the gross domestic product report, on recent Fed meeting, suggest that they are going with this way, simultaneously printing money and rising rate. So that's what we have in the longer term. In the shorter term, mostly we're watching for the same patterns and same levels. On the daily chart, we have the same consolidation that we extended recently, and we're watching for the target around 25.50, 26 area, because 26 is strong confluence, 25.50 the intraday extension, which is also previous lows. So this is our nearest target. And based on the performance on intraday charts, if market starts this upward action, it should happen relatively soon, because by our view, we said that there's two levels to keep an eye on for possible taking the long position if you would like to. First is a confluence, is 22.24, and this is invalidation point. This invalidation is just because of two moments. First of all, this is 618 support. Second, this is long-term trend line, actually the lower border of the channel. And it is obvious that if market will break this channel, we can't speak anymore on a target of the retracement, right? So that's why this is some kind of the invalidation point. So if you plan to take the position, you could choose from the two options. Either place stop below confluence. This provides you best risk reward report, but if market will keep going lower, you will have to make the decision on re-entry around this area. It's because bullish context will not be totally erased with the breakout of the confluence, although it will be significantly hurt. Otherwise, place initial stop right below this area, and if we will be correct, the market start turning up from this level, you later move stop to the break-even. So that's two ways how you could act. Currently, what we have, we see that market here is forming bullish grabbers. That suggests taking out of the stop, and maybe precisely from that area, it will be reestablishing on the upper direction. But the problem here is that first, market hasn't quite reached the confluence support. It stands somewhere slightly above it. Second, if you'll take a look at the hourly chart, take a look with this our ABCD pattern that we talked about, hits the OP, keep going lower, but market slightly hasn't quite reached the XOP target, which makes the profit agreement with the support area on for our time frame chart. At the same time, potentially, here's might be the butterfly being formed that could finalize this ABCD target, ABCD action. If even here we use as the A points, maybe slightly lower target, not the target, the starting point, where the actual downside action starts to approach the XOP, move XOP slightly higher, right to the butterfly target. So it's just will be a bit more perfect. But anyway, you will place stop below the confluence area. So that's one of the possible scenarios, and you could, well, act as you would like to. So for instance, if you would like to make the position on the grabbers that we have, you could try to take position right now, but anyway, you will have to place stop below this area and below the confluence, which will be even better, because they are slightly lower. So if you other scenarios, just wait when the market completes the XOP, completes the butterfly, and then trying to take the perfect position in the same area, but with much better entry point. That's the only question that you would like to, that you will have to consider for taking the long position. For speaking about the bears, so currently, guys, since we do not have clear bearish continuation patterns, clear bearish signs, I wouldn't consider taking the short position right now. So we need to get more bearish context that we do not have it right now. Besides, let's take a look at the overall retracement here that we have is very gradual and slow and choppy. That's definitely not the bearish reversal. This is just a question where market could try and turn up from this level or based on the grabbers. Personally, as I a bit more conservative, I prefer to see the final points and the completion of the patterns. That's just brings more confidence and provides better entry opportunity. But it's also not forbidden try and take position right here, just hide stop below the support area on the time frame chart.